This is what I refer to as a smart money reversal. You are years away from ever being able to do that consistently. I promise you that's not me trying to talk down to you. It takes a great deal of understanding of knowing what it is that we're trying to do here, because essentially what you're doing is you're picking the tops in bearish markets. Now, did you hear what I just said? We're picking the tops in bearish markets. I'm not afraid of that. I don't try to discourage that of my students, but I do absolutely discourage that in my own trading. When it's a bull market, I'm not trying to pick the top, because they're always going to go well beyond what I think and what you think it's going to do. But when we're bearish, we can really get refined and trade the tops in bear markets because they're predictable. They have a characteristic. They have a rhyme or reason as to why price should behave a specific way. Versus when you're in an extremely bullish market, how do you know? I don't know every single time that they won't go in there and intervene one more time and drive it one more time higher. That's why it's dangerous to try to pick tops in bull markets. But when the market is predisposed to go lower and you have all these types of characteristics in play, it's rather simple to anticipate where the market's going to run, create an extreme, and do a smart money reversal. But that easy perspective I'm talking about, that comes with 30 years experience. You don't have 30 years experience. Some of you don't even have 5 years experience. So it's going to take a long time, and I mean long time, for you to be able to see smart money reversals as your entry points. Okay, but you don't need that. Anticipate it being there, and then once it does, the market breaks lower, and any rally back up, look at the bodies here. Okay, that is what? That's consequent encroachment of the 60-minute fair value gap SIBI. That's your low risk short. We're trusting that we've already mohawked above here with these wicks. So now we're back down in here. So any attempt to trade in the middle point of this shaded area here, that could be your low risk short stop loss right above here. What happens if you get stopped out, ICT? Same thing. Wait for it to go lower, leave the fair value gap low, and if it can touch the bottom of it again, I would use that as my entry. Stop would be right back above wherever the highest high was formed, or the consequent encroachment of the wick if it formed a higher wick here. That's how I would use it. I would not be afraid to go back in.